Ever feel that pinch when you see how much tax comes out of your paycheck? It's a universal feeling, right? But what if I told you that some of the wealthiest people on the planet, people with billions of dollars, sometimes pay a lower tax rate than you do? It sounds crazy, but it's true. And it's not because they're breaking the law. They're just using the tax code in ways most of us never even knew were possible. So, how exactly do they do it? Let's pull back the curtain on the world of billionaire tax strategies. First, you have to understand the difference between income and wealth. Most of us earn our money through a salary. We get a paycheck and taxes are taken out right away. That's our income. Billionaires, on the other hand, hold most of their money in assets like stocks, real estate, and private companies. This is their wealth. The key difference, the value of these assets can go up by billions, but as long as they don't sell them, that growth isn't considered taxable income. It's just an unrealized gain. So, their wealth can skyrocket, but their official income, the number the IRS looks at, can be surprisingly low. This brings us to their number one strategy. Buy, borrow, die. It sounds dramatic, but it's a real financial planning concept. Let's break it down. First, they buy assets. This could be anything from shares in a tech company to a portfolio of commercial real estate. They hold on to these assets as they grow in value over many years. Next, instead of selling those assets to get cash for their lavish lifestyles, which would trigger a massive capital gains tax bill, they borrow. They go to a bank and take out a loan, using their massive stock portfolio as collateral. Because the value of their assets is so high, banks are more than happy to give them loans at incredibly low interest rates. This loan money isn't income, so it's not taxed. They can use this tax-free cash to buy yachts, private jets, or whatever they want, all without selling a single share and paying a dime in capital gains tax. So, they've bought the assets, and they've borrowed against them. What about the die part? This is where it gets even more interesting for their heirs. When a billionaire passes away, their assets get what's called a step-up in basis. Let's say someone bought a stock for $10, and when they die, it's worth $1,000. Normally, selling that stock would mean paying tax on a $990 gain. But with the step-up, the cost basis for their heirs is stepped up to the current market value of $1,000. This means the heirs can immediately sell the stock for $1,000 and pay zero capital gains tax. That $990 gain, which accumulated over a lifetime, is completely wiped away for tax purposes. The family can then use this money to pay off the loans the billionaire took out, and the cycle can start all over again. Another powerful tool they use is charitable giving. But not in the way you might think. Many wealthy individuals donate appreciated assets, like stocks that have gone way up in value, directly to their own charitable foundations. By doing this, they get a double tax benefit. First, they get a tax deduction for the full market value of the donation, which reduces their taxable income. Second, because they donated the stock instead of selling it, they completely avoid the capital gains tax they would have owed. Their foundation can then sell the stock tax-free, and the money can be used for charitable purposes over time, often under the family's control. Then there are more complex instruments like grantor, retained annuity trusts, or This is a strategy to pass wealth to the next generation while minimizing estate and gift taxes. A person puts assets into a trust for a set number of years and receives an annual payment, an annuity, back from it. The goal is for the assets in the trust to grow faster than the IRS set interest rate. Any growth above that rate can be passed on to their heirs, completely free of gift or estate tax. It's like a financial magic trick that can transfer millions, or even billions, to the next generation, tax-free. So, when you hear about billionaires paying little to no income tax, it's not usually because of some shady backroom deal. They're using a sophisticated playbook of legal strategies by borrow die, strategic charitable giving, and complex trusts to build and preserve their wealth across generations. It's a completely different financial world, one that operates by a set of rules that seem tailor-made for those at the very top. It certainly makes you think differently about taxes, doesn't it? Thanks for watching. If you found this breakdown interesting, make sure to like this video and subscribe for more deep dives into the world of finance. See you next time.